Home builder confidence remains in negative territory in April. Growing economic uncertainty from tariff concerns weighing down on builder sentiment, while rising material prices also due to tariffs have home builders seeing costs rising per home by thousands of dollars. National Association of Home Builders CEO Jim Tobin joins us now to discuss. Jim, great to see you as always. Jim, so Fed head Jay Powell today was speaking. He was talking about the Trump tariffs, Jim. He's talking about how, listen, that could very well mean higher inflation. It could mean slower growth. I'm curious, Jim, when you think about these tariffs, how you're thinking about them for the home builders, Jim. What are the implications, the ripple effects you're looking for?
Good afternoon. Thanks for having me. I think the ripple effects are yet to be seen, but we're anticipating higher prices. We saw our HMI, which is the NHB Wells Fargo Housing Market Index, go up only 1 point this month to a reading of 40. That's still well below the break-even point of 40. And when we survey the builders on this, they're already seeing price increases up to 6% from their suppliers, which translates into over $10,000, almost $11,000 in increased costs when it comes to building a new home. So we also view the tariffs as inflationary, and I don't think if we know the full impact yet.
And Jim, what do you think is the way out of this for builders, right? There was a sentiment survey out there. 29% of builders said that they're going to have to cut home prices because of the, tariffs and spending and things like this. But how do builders get out of this? What is their future for the next 9 months with tariffs coming in?
Well, I think it's going to have to be a lower mortgage rate environment. I think the reading, our HMI went up 1 point this month, and we think that's largely due to that dip in mortgage rates we had a couple of weeks ago. So if we can see a quick clear of the bond market starting to settle down and hopefully bring mortgage rates back down into, closer to 6.5, I think some people will begin to come off the sidelines. That said, it really is market to market. I was just in Florida this week visiting our builders down in the Panhandle, and they're doing very well. Money is flowing. People are coming down there to buy homes, and home construction is booming. But yet, when I talk to our builders in Milwaukee, Wisconsin, border state, a lot of trade comes across those borders from Canada. They've seen the market kind of swing both ways. People pulling out of the market, not wanting to buy a home or start a home, but then yet coming back in over the last couple of weeks saying, well, maybe now is the time. So it's uncertainty is the word of the month, and probably the word of the next couple of months when it comes to home building in this country.
Jim, I assume you're talking to the Trump administration, so I'm just wondering, when you talk to them, what are you telling them, Jim, and what's their response?
We are talking to the Trump administration. They're very attuned to what's going on in the housing market. They have made a pledge on the president's inaugural day to lower housing costs and build more housing. So for us, it's all about just explaining the impacts that these tariffs are going to have. Our three largest trading partners in building materials are China, Canada, and Mexico. So these tariffs on Mexico are going to bite pretty hard in the short term. But again, we're hoping for better trade deals, which means we'll ease those tariffs. We can get to fairer trade, and we can get back to some balance in the markets right now. And again, I think there's a long way to run on what the Trump economy truly looks like. Between the deregulatory actions this president is taking, we've already seen several of those aimed at the housing industry to lower the cost of the regulatory burden on home construction and apartment construction. I absolutely have faith that the president will cut new trade deals. And of course, you have this big tax bill that the Congress is just starting to work on, and there's a lot of incentives in there for home ownership, affordable rental, and of course, the business side of the equation as well. So I still think we're a few months, if not longer than that, away from truly knowing what this economy looks like.
And Jim, given what you just said about the potential for tariffs kind of equalizing out and balancing out, what do you think the opportunity is for investors to look at some of the home builder stocks like the Home Depots and the Lowe's of the world, for example?
They're going to be there in the long run. I mean, everybody should be long on housing in this country. The demographics underpin it. We know that the millennials are coming into their prime home buying ages. So there is a lot of demand. I think it's just once the economy settles down, people feel a little bit more certainty, and then interest rates begin to trend downward again, mortgage rates begin to trend downwards again. I think that there's a lot of upside to the housing market. And I think that it's time to take a look at the home builders, and of course the building material companies out there, and be ready, because when we pop, it's going to go quickly.
Jim, I know you touched on this. I just want to double click on it quickly here. The 30-year fix, Jim, I'm just looking, Mortgage News Daily says we're at 6.86%, Jim. You got very smart economists there on staff. I'm curious, what do they tell you? What's their forecast about where they think that heads from here?
Well, again, I think we haven't fully seen the impacts yet, but I think 7% mortgage rates remain kind of the top of the cycle in the short term here. Again, it's all based off that 10-year Treasury. And as long as that stays somewhere, kind of trickling around 4.5 or south of that, I think we'll be okay. We won't get into that crooked number of 7. I like when we get closer to 5. But I do think we're gonna settle in here 6.5, maybe a little bit higher for the next several months. And again, if you have to move, there's no right or wrong time to move if your economic or personal situation dictates it. But I do think that higher handle on mortgage rates is going to keep people off the sidelines, at least into the bulk of the spring building and buying season. And that, of course, is the challenge if we want to jumpstart the housing market.
Jim, as a homeowner myself, locked in at 6.5. I agree with you. 5 does sound a lot better, Jim. Thank you, as always, for joining us. Appreciate it.
Thank you.